Most people think you need a lot of money to start investing, but what if we told you that just $1,000 could be enough to get started? At first, it sounds hard to believe, and honestly, that's exactly what many people told us. You can't do much with $1,000. But here's what they didn't realize. Even a small start can grow into something bigger if we stay focused and make smart choices. We had no fancy office, no extra savings, just a small desk, an old notebook, and a strong wish to make it work. Every step felt uncertain, but with each move, we learned something important that most beginners usually miss. And that's when things began to change. In this video, I'll show you how we turned that small $1,000 into real growth, the simple strategy we followed, the mistakes we avoided, and the one key detail most people don't talk about. And once you know it, you'll see small investments in a whole new way. Why I decided to begin with only $1,000. When I first thought about investing, I didn't have much money in my pocket. I was scared of losing it all, but I also knew that if I waited for years to save a lot, I might never start. That is why I decided to take just $1,000 and treat it like my practice money. This amount was small enough to manage, but big enough to teach me real lessons. I told myself that if I lose it, at least I will learn something valuable. And if I grow it, then I will prove that even small beginnings can lead to big results. This mindset made me brave, and it helped me take the first step without waiting for the perfect time. Because trust me, there is never a perfect time. Learning more. Before spending a single dollar, one mistake many people make is jumping into investment without learning. I knew I could not afford that. So before I spent even $1, I spent weeks reading, watching videos, and asking questions. I wanted to understand what stocks are, how bonds work, and what mutual funds do. At first, it all felt confusing, like a new language, but slowly I started to see the bigger picture. I realized that knowledge is more powerful than money. The $1,000 was important, yes, but the real investment was the time I gave to learning. Dividing my $1,000 like a pie. When I finally felt ready, I didn't put all my $1,000 into one place. I divided it into smaller parts, just like cutting a pie. Some part went into safe places like index funds, where risk is lower. Another part went into stocks of good companies, where returns could be higher. A tiny part I saved for testing new ideas, just to see how different options work. This division made me feel safe because even if one side didn't work, the others could balance it. Many beginners put all their money in one stock and then cry when it falls. But I wanted peace of mind, and dividing my money gave me that comfort. Patience became my secret tool. After putting money into different investments, I faced a new challenge: waiting. At first, I checked my phone every hour to see if my money was growing. Sometimes it was up, sometimes down, and my heart jumped with it. But soon I understood that good investments need time. They don't grow in one night, so I trained myself to be patient. I told myself, this is like planting a seed. You water it, you wait, and one day it becomes a tree. Patience helped me stay calm during small losses and gave my investments the time they needed to grow. The power of adding small, extra amounts. Something amazing happened when I started adding even small amounts to my $1,000 investment. Sometimes I put $50, sometimes $100 more when I had it. At first, it felt too small to matter, but slowly it made a big difference. This is called compounding, where your money grows on top of itself. Even if you start small, regular adding can make the amount much bigger over time. I realized that the real secret is not just where you put the money, but how regularly you keep adding to it. That is how small investors can slowly turn into big investors. How I handled my first loss. No journey is complete without mistakes, and I made mine very early. One of the stocks I bought started going down, and I lost around $70. At first, I felt very sad. I thought maybe people were right, that $1,000 is too small and I should have never started. But then I took a step back and looked at it differently. Losing money is like paying for a lesson. That $70 loss taught me more than any book could. It showed me why research is important, why patience is needed, and why you should never put all money in one place. Instead of quitting, I used the lesson to grow stronger. I promised myself that every mistake will only make me smarter, not weaker. Building a safety net around my money. Another thing I learned was the importance of having a safety net. This means you don't put all your savings into investments. I kept some emergency money in a simple bank account, untouched. Why? Because life is full of surprises, sickness, sudden bills, or family needs. If I had invested every single dollar, I would be forced to sell my investments when I needed cash, maybe at the wrong time. This safety net gave me peace. It made me confident to let my $1,000 grow without fear that I might need to pull it out tomorrow. Recording every step in a simple notebook. One of my habits that really helped me was writing everything down in a small notebook. I noted when I invested, how much I invested, and why I chose that option. At first, it felt boring, but after a few months, I could see a clear picture of my journey. I could see what worked, what failed, and how much I had gained. This record keeping was like a mirror that showed me my mistakes and my wins. Many people forget what they did and repeat the same errors, but by writing, I kept my brain clear. Even today, when I look back, I can see how my $1,000 slowly started growing step by step. The joy of small but steady growth. The most beautiful moment in this journey was not when I doubled my money. It was when I saw it growing slowly but surely. Even a $20 profit made me happy because it showed me that my plan was working. It gave me proof that patience and discipline were not useless. Over time, these small returns became bigger and more consistent, and that joy gave me confidence to keep going, to add more, and to trust my process. Sometimes people chase fast profits, but I learned that steady growth is more powerful. Sharing my experience with others, as my strategy started to work, I felt the need to share it with friends and family. Many of them thought investing was only for rich people, but when I told them about my $1,000 start, they became curious. I explained how dividing money, being patient, and recording steps can help anyone. Some of them even started their own journeys with small amounts. Teaching others gave me even more confidence because when you explain something, you also learn it more deeply yourself. And it felt amazing to see that my small experiment was not just helping me, but also inspiring people around me. Looking ahead. With hope today, when I look at my journey, I feel proud. That $1,000 was not just money. It was the start of my learning, patience, and growth. I know I still have a long way to go, but now I believe that consistency is more important than size. With each small step, my future looks brighter. I don't dream of quick riches anymore. Instead, I dream of steady progress year after year. My hope is that more people like me who think they don't have enough to start can see the story and realize that even with little money, you can build something meaningful if you never give up. Investing doesn't always need a lot of money. Even a small start like $1,000 can grow into something big. If this video touched your heart, please press the like button because it really helps us make more inspiring videos. Don't forget to subscribe to the channel and turn on the bell so you never miss a new upload. Share this video with someone who needs to hear it because sometimes people think big dreams need big money, but that's not true. Remember, you don't need to be rich to begin. You just need courage and consistency.